All right, what's up, everyone? Welcome to another market review. We're going to try to keep it short today, I promise. Today's November 2nd, 2023, and today's topic is going to be time flies, use it wisely. What do I mean? Well, price is always going. In these futures market, there is 23 hours where price fluctuates up and down, up and down, up and down. And so there's always an opportunity somewhere at some time. However, it means jack shit if you can't exercise and execute on any of it. And so, with that being said, ICT concepts, they are the truth. They are gold in this industry because these concepts, they are the market. Time and price, how long it takes time for a certain level of interest to be reached, price. And this flies over the head of so many people. They watch these 1 minute charts and they think, oh shit, that's too fast. But what they're really looking at is just such a small segment of price that is myopic to how these smart money and big money entities, aka the central banks, they look at their market, because that's what it is. It's their market, not ours. It's not a free market. They can control price however they want. You don't think that the people in charge of the world are not going to use their markets to make the most amount of money that they can? It's not worth fighting the idea. If you accept that smart money is always looking at their markets from a higher time frame, they want to know what their price, how their market is going to look like, a couple weeks from now, a month out from now, maybe even a year out from now. They're thinking long term, longevity, because this is them. This is their market. And so us as speculative traders, we need to use our time wisely and see what ideas and what we want to see in price during that time as well. You have to think from the mindset of a central bank. With that being said, I'm not going to drop down the rabbit hole. I'm just going to keep on going forward. So, knowing that price is fractal and that we can look at price on any given time frame, and knowing that these concepts apply all the same, we start from the monthly time frame. Yearly it's pushing it, all right? That takes a lot of time, but time does fly. So, will I give yearly predictions maybe at some point in time? We'll see. Will I do it now? Not right now. So, at the beginning of October, I gave this out in my Discord, as well as I posted it on my Instagram for the world to see. It's my expectation during the month of October. I also gave my expectation for the month of September before it happened. It's on my highlight on Instagram. You're more than welcome to check it out. Call to the tick. It's all on there for you to go and look at. But however, I'm not going to get off topic. Let's get into the brass tacks of what we have on hand right now. So this picture right here is just this Discord chat being cropped to make smaller to appear on here. This chart is this chart. We'll get into that right now. However, this candle is the start of the month. That's what it looked like. Just straight up dead. That's what it looks like. Right? There's no movement up yet, no movement down, nothing of that nature. It's only the second day of October. So I gave my prediction for what was going to happen and what I anticipate happening during the month of October. So in ES, which is always going to be on the left, I said we reached the main objectives I had wanted to see during the month of September. I'm interested in June's low of 42.61. However, my main target lies in the NASDAQ. Now the NASDAQ, we close outside of the June 2023 BISI, which is this pink range right here. We close underneath it, classifying the BISI as an inversion fair value gap now. So I explained this concept in one of my old market reviews, so I'm not going to get into that. But the brass tacks of it is that I did not expect price to trade over the high end of this range on a closing basis. My objective is the high end of the BISI created toward the month of May, which is 14,578 and 3/4. That is this candle's low right here. Right here. You can see in orange, that's what correlates this line, 14,578 and 3/4. And this is what price looked like at the beginning of the month. This is a monthly chart, so you could see price over the given course of an entire month. Now, with that being said, with 30 days left in the candle, and what I said, here's what price looked like as of today. So, in the NASDAQ, we took out that low at 42.61 that I was mentioning. We also reached down to this bullish order block. This candle's opening price, it is the last down close candle before a change in the state of delivery. So the last down close before 1, 2, 3, 4, 5 consecutive up close candles. So when price comes back down to that, that is true support ideas. You want to see support from that level. And so this candle comes down to it, wicks past it, takes out this sell side liquidity pool beneath this monthly candle's low, and closes over the top of it. Remember, wicks do the damage, but the bodies of the candle tell the story. Now, with only 2 days in November, this thing has moved a lot. And so you could see that this thing moves. You know, they'll see monthly charts and they'll be like, oh man, it takes a while for price to run on the monthly charts. No. This is 2 days. 2 days. And you can see that we've already moved a good chunk. You know, this is over the course of 30 days. You don't think that this thing does the same applications that it does in the 2-day time frame? Like, price is price. Don't get me wrong. Price is price. What do I mean? This number right here is the same number on all time frames. All that changes is what price did over a certain amount of time, over the given amount of time. And so we'll get into this when we drop down to our weeks, which is going to be the main brass tacks of this discussion, because I really want to implement what I mean by it's all about time and price. And so we're looking at what price did over the course of 30 days versus when we drop down to the weekly time frame, we'll be looking at what price did in the span of 7 days. Well, technically 6 because Saturday's closed, but you get the premise. Now the NASDAQ, here was our target at 14,578 and 3/4. At the beginning of the month, we shot up. That was the Judas swing, the fake move, enticing traders to, chase long and use their indicators to, propel us out of the bull market. I'm holding quotation marks in the air. Before sharply dropping lower, reaching our objective, falling just short of our monthly BISI consequent encroachment, which is this candle's high to this candle's low, the midpoint between those two exact numbers. So these two exact numbers right here, if you take a fib and get the halfway point of that right here, that is what that white line is at 14,088. So it falls just short of that midpoint range. I am still a fan of lower prices, 14,088 as well as 13,597 as a drawn liquidity, and I will give my ideas of what I think could constitute that not playing out and what I want to see for that to happen. So before I do that, let's get into the weekly time frame. This up close candle right here, as well as this down close candle in ES, that is the first week of October. So 6 days, first week of October. So this is October 9th right here. It's time and date stamped. You can see how this orangish, yellowish shade in the back, this is our June 23 buy side imbalance, sell side inefficiency, the fair value gap that I mentioned, as well as the inversion fair value gap on the NASDAQ. This is the start of the month. We create a predominant low and lots of downside delivery. So 1, 2, 3, 4, 5 consecutive weeks of downside delivery. What can you expect? A retracement. Where? Well, there's this huge imbalance right here that needs to get repainted, and this weekly bearish order block that just so happens to be just around the consequent encroachment of these 2 points right here. So the midpoint. Now, in NASDAQ, same thing. It's coming up to rebalance this inefficiency right here. And it also created these relative equal lows right here. What are these? That is the illusion of false hope. That is a double bottom that retail loves to see. They'll see that and say, hey, that's support right there. You know, we're finding support from that level. That's a supply zone. That's bullshit. That's what that is. And so going into the next week, you can see how price ran up, touched the weekly bearish order block, and sharply rejected lower. As for NASDAQ, we did the same thing. Refilled that imbalance, wicked a little bit past it, but looked at where we closed. And this is the second week of October. So this is Friday, the 13th. And so this is halfway through the month, just about. So now, using that logic, these candles' opening prices are the opens of the monthly candle. When price is above here, that is a bullish monthly candle. People see this and they want to chase it. Oh, we're going to have higher prices. No. Do not fall for the trap. Do not. Because when we get into the third week, look at what happens. That's this candle right here now. Come up once more and drop down aggressively. Remember, this candle's open and this candle's open is your monthly open. So when we're down here, now we're seeing a black candle. It is a bearish candle. It's all a matter of time and where price is at, and knowing these open, high, low, and closes. Those 4 price points are all you need to know. So then what does price do after? Well, runs up, touches this candle's low, and immediately shoots lower to 14,250. What is 14,250? This candle's high. Fair value gap. There's also another one residing beneath it, as well as sell side liquidity resting beneath this candle's low. So what you're really looking for is just this candle's low. That's price right there. Not that exact one, but go to your weekly chart on the NASDAQ futures. Find this candle, get that low. And this candle's high. And you'll see the range that I am looking at. It's a range, but it's from 2 very specific levels and 2 specific numbers. It's not an area, it's a level. this white line right here, this IR, that's an immediate rebalance. I covered this in the last market review, but yeah, I'm not going to discuss it. If you want to know about it, go back and watch the October 28th video. So here we are on October 27th. This is getting towards the last few days of the monthly candle and what time is left in it. You can see how we reach into this weekly bullish order block, as well as wanting to refill what remained of this fair value gap that was created right here. And that's why I only had this little small orange section outlined, is because these two candles did a solid chunk of refilling that imbalance, but there is still remaining right there. And so there's also this sell side liquidity pool beneath it, much like this idea over here with the sell side liquidity, but mainly this candle's low and this candle's high. So here we are presently. It's November 2nd at 22:22 or 10:22 New York Eastern time. What do? Now that level is outlined clearly, and you can see how we filled that entire balance. We still closed inside of it, so it's acting much like resistance right here. It's in a deep discount, so from this candle's low to this candle's high. Equilibrium's right around here. You can kind of eyeball it, but it doesn't take a genius to know that we are below that 50% level. And so that is a discount. This is where smart money wants to be buying orders, and you could see how price reacted off here. All right, here's the part of the discussion that if you got here, you're going to be rewarded. Since July's high right here, we've had a low, a lower high, a lower low, a lower high, a lower low. And so what we want to see here is a retracement into this bearish order block right here and run lower to make a lower low. However, if price does go above 15,469 and a half, that constitutes as a break of market structure, and we'd have to pause ideas of all bearishness. Okay, what do we also do? We close over this June 23, 2023 inversion fair value gap, and we want to see resistance be found here, much like how this candle came up, touched the low end of it, and dropped aggressively lower. So hang on to that idea. We will revisit it later in the month. I am still of the interest of 14,088 as well as this weekly BISI. And then ES. In ES, I don't want to see anything close over this bearish order block's mean threshold. So from this candle's high to the low, the midpoint of that, that's mean threshold. Anything on a closing basis, and I am of the belief that we will see a new high and a break of market structure. So I do not want to see that. However, if it does, because I don't control the markets, I don't make them, then we have to be able to switch gears. There's a small inefficiency right here that we're going to close over, I don't doubt, but we will see. Once we do that, this turns into an inversion fair value gap, and expect support to be found from it. My main interest lies in this tail consequent encroachment right here. It is March's tail, the midpoint of that, as well as March's sell side liquidity pool, which is just the month of March's low. All right, dropping down to the daily here. This will be the last slide, as I'm not going to drop down into intraday action, which is hourly and below. All these candles, they represent a day. And so if you want to go back and find the opening of price, all you have to do is come here to October 1st, find that candle's opening price, and it will be the same as the opening price on the monthly candle. And you can see what price does and how it fluctuates day by day, and when it's a bullish candle and when it's a bearish candle. In November, we've had, this is the start of November. So we've had 2 huge consecutive up close days, which is why that monthly candle is so orange right now. I'm going to change it back because it's no longer spooky season. So purple might be cool, but I feel like that could wait anyway. Like I said, here's your weekly bearish order block. We did close on the daily above it. However, we're still respecting this little SIBI range, so I want to see resistance found here. If we do tread higher, which it's definitely possible because it's NFP Friday, and that's a huge news driver, very manipulative, usually 2-staged, so we could reach for this daily bearish order block right here. This candle's low at 15.083. I want to see resistance found there, and then drop lower. What is it also? The midpoint of your June 2023 inversion fair value gap, which is this pink range right here. This thing needs to get repainted, needs to get re-rolled. So I want to see a retracement into 20 or 30% of the weekly candles range. And how do we measure that on the daily? Well, this is Thursday, this is Wednesday, this is Tuesday, and this is Monday. So what do? We take the low end, the low of this candle, because it's the start of the week, and then we go to whatever high we make on the day, or we make on the week, because it's within this given course of time, right? It's price over a given course of time. So from Monday to Friday, that is one weekly candle. We take the low of the week, the high of the week, and we want to see a retracement into 20 or 30% of that range. Be sure that you're keeping track of this. It's not hard to monitor price over the course of days and weeks and even a month. Like, all it takes is 30 minutes of your time once a month to write down what you expect for the month and seeing how it plays out to fruition. And then, you sit down every Saturday, review what the market did throughout the week and what you're expecting this next week. And you'll build a database of what happens and what you expect it to happen. And even if you do get it wrong, you have opportunities to learn. You can even type price out as it is, as it happened. And what that does is it builds pseudo experience in your mind. It's sort of like a false memory, but you're really just, coding your mind to predict this. And that's what pseudo memory is. And keeping up with the daily candle, that's going to be the struggle for a lot of these new traders that come in, knowing what price is doing day in and day out. And my solution to that is that you have to think of this industry as your own business, your own work. As a boss, you're self-employed, and you have to be able to call your own shots. That's what this industry is all about. You're the analyzer, the risk manager, the boss. You're the one that executes. You're the one that manages yourself during those executions. You're the one that recaps everything. You're the one that does all the work. And so you have to constantly clock in. There's no clock out. There's no such thing. This has to be in your mind most of the time. I say most of the time is because you want to have a solid understanding of where you're at on the daily chart. Because think about it, each of these candles represents a new day. So when you wake up in the morning, okay, well, yesterday was the 2nd. We had a large expansion day. And on Friday, we can expect, it's a perfect opportunity for a TGIF trade. What's TGIF? After a large expansion in one direction, price likes to retrace from the high or low of the week, depending on which direction expanded, into 20 to 30% of that range. And so as the CEO of your business, you have to know that, okay, tomorrow's Friday. What can we expect? This is what you can expect. Just like how retail stores during Black Friday week expect hell on earth. It's fucking loose chains. Everyone's everywhere. It's all crazy. It's all over the place, right? It's no different here. We know what to expect and when to expect it. This shit is not random. Not one bit. It's all in your grasp. It's all within the realm of possibility. Impossible is nothing. You just have to allow time to do its thing. That's it. Look at this right here. 18 hours in a daily candle. Technically 23, but there's 18 hours left in this daily candle. Price is going to go up and down, and fluctuate throughout the entire day. And so what this means is that from the open, it takes 23 hours to form the high and the low. And at the end of those 23 hours, you will get your closing price. It's no different from your monthly candle, your weekly candle, your daily candle, which I just covered, hourly candle, 15-minute candle, 1-minute candle. Nothing changes. The only thing that changes is your perspective on where you're at in price. Because the price range is going to change dramatically when you drop down to your smaller time frames, which is why it is key to understand and mark your higher time frame levels so that when you drop down onto your intraday levels, hourly and less, you know where you're at in price. You have your map. Without your map, you're fucking lost. You're gone. Get that kid a map, bruh. You end up becoming a fucking meme. And so that's what this whole thing is about. Time and price. Hopefully you found something insightful from this lecture. If you did, I'd appreciate a thumbs up. It's more of I'm not begging for it. It's more of an acknowledgement that you found something useful from this lecture. And that's what I'm going for. I'm not going for likes. I don't want any of that. I want people to understand that these markets are not random. And if you can understand that, you can make a living off of it and secure your freedom. And all it takes is you to commit, you to put that work in. And then once you have it, you can't unsee it. You can't. There's that moment where it all makes sense. And me talking about it, it's not going to make it click. It's going to take you realizing it. It took me 6 months. It took me a good amount of time to be like, oh, and having that realization of thought. And I can't tell you how long it's going to take for you. But the more you chip at it and dig into it, the faster you'll get there. Just keep putting that work in. And don't forget why you're doing it. With that being said, safe trading and be safe.